Welcome back to Trading 360. I'm Sam Bartis. It's time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat, as always, will take us through the charts, and here to take us through the trades is Jessica Inskip. Very pleased to say she's joining us, Director of Investor Research at stockbrokers.com. Very good to see both of you. Thanks so much for joining us. Jessica, let's start with your big picture 360 view on the market today.
Yeah, absolutely, Sam. I think we're really heading into this macro environment where volatility is becoming the new normal. It's not just expected, it's the structural shift, but there's also an efficiency shift that's happening as well as we see these new themes emerge and the AI rally expands to this efficiency boom as we see blockchain and tokenization and stablecoins really come to life. But between tariffs, uncertain Fed policy, even geopolitical friction, I think companies and investors really need to see agile. And we've seen that with what's happening with tariffs. It's spread out between multiple products. You've even seen that with the way that operating expenses have been really handled. So what I'm watching for is how companies are responding to that this earnings season. It's been great thus far, but companies are responding really with pricing and sourcing adjustments, not necessarily layoffs, speaking to the health of the consumer. So I'm just monitoring for any changes of that tone, what's happening with tariff, what's happening with cost, what's happening with CapEx plans, and how is that translating into earnings as we look forward to the future.
Yeah, we've already got some evidence of that, but very much as you say, wait and see mode at the moment as we have plenty of moving parts as you outlined. So stay agile is what you're saying. Talk to us about your first stock, Invesco.
Yeah, so this goes through with an overall earnings theme, and I want to call out what Citi stated. Citi stated volatility is going to be, I suspect, a feature, not a bug, of the new world order, something like that, and Citi is going to benefit from that. And when I see this benefit from volatility, and that translates over to the retail investor, Invesco comes to mind, and Invesco actually came up on one of my technical scans that I run weekly. It's showing both signs of technical strength, fundamental strength, and I see a key point of resistance around 19, and I think that's a really good opportunity to get exposure to asset managers with gaining investor confidence. So again, my bullish charts, I look for a weekly technical scan with a bullish crossover of the 13-week and the 26-week moving average. That's 1 quarter worth of prices, 2 quarters worth of prices. We see prices steadily increase quarter over quarter, earnings over earning. That is great. On top of that, from a fundamental perspective, money is flowing in. Invesco brought in $15.6 billion in new long-term investments last quarter, and mostly that was from ETFs, index funds, even strong demand in China and India, and they've also had some record shareholder returns. So it goes to that retail trader that goes into those passive index funds. Invesco is going to benefit from that. As we see more volatility, I think that's going to continue.
Okay, so that's the thesis on Invesco. Let's get over to Rick to take us through the chart. What are you seeing there, Rick?
Yes, the 19 level stands out to me as well. And I divvied it up into 2 more granular regions here. 1870 first is our green line. That's about where price topped out repeatedly. Then it became a notable low and high point once again here. But also the 1950 level. That matches up more with the notable highs from that point. So we can also see now that price has pushed above both of these areas either way. So around 19 was an important spot to be watching here. We have cleared that pretty handily. Actually, today's candle even looks like it's forming a bullish engulfing candle. Yesterday's small red candle is being totally swallowed up by the larger green candle today. I'm referring to the real bodies, the distance between the open and the close of each candle here, not really the wicks necessarily. But we can also see very heavy volume during this push upward here. Volume spikes are at least 50% above the 50-day moving average of volume. So our average was around 8.7 million, and we were at over 35 million in one day during this period. So very heavy volume here. RSI also trending upwards, still in the overbought area, still making new highs. So an interesting breakout here that we are noticing in real time. And we can see as well our +4 standard deviation channel, 4 standard deviations up from our blue linear regression line. That could be one potential boundary to look for near-term highs. 2180 is about where that comes in here. So quite an extreme move based on our relative price history. But as we said also, that 19 region here and also 20 would be the -3 channel. If we were to look at a longer-term chart for a moment here as well, you can see that we have broken above this 1950 or so level, a longer-term high point on our chart here that we have bumped up against repeatedly. But now we could see that the next notable volume area would be around 25 or so. So perhaps an area to watch in the coming days.
Okay, we'll be watching. So that's a bit of a snapshot on Invesco. Let's shift gears now and move to your next stock, Jessica. And of course, all eyes on this one ahead of that earnings report card, which will be getting first cab off the rank as far as the Mag 7 along with Tesla. Talk us through Alphabet.
Yeah, absolutely. You're hitting the nail on the head there, Sam. And there's so much importance with that lens that's on Alphabet due to the AI narrative. And we see this team that Zuckerberg is putting into play to get to that race to AGI, artificial general intelligence, which is really just the game theory. We don't even know what that is. But in my view, the really main winner in this race of AI and how we're going to utilize it is ad spend, which is where Google comes into play. If we think about early on in the .com world, the internet, we perceive it as really being free, if you will, or Gmail and all of that, but it's actually allowed us to have some targeted ad spend. And so I want to see how that translates. And that's why Google is so important. This is not a buy or sell, it's a hold. If you have any covered calls, we want to make sure to remove those so we can have some upwards potential. But here's what I need to watch for in Q2. They could deliver several positives, especially with artificial intelligence. Look out for YouTube, any cloud, but any investor excitement could be muted with that wild card that we have, which is the DOJ trial. So what's important to pay attention to is any ad spend acceleration, anything that lifts sentiment, any Google Cloud strength, because if we're utilizing broader AI, of course, we have to have it in the cloud for most use cases. And then YouTube, because of a beat that could possibly happen there. We've had streams overcome traditional networks, and YouTube's numbers have really been soaring. So really, there's a lot to watch that can give us an idea into the overall AI narrative with Alphabet, especially when we think about CapEx spend as well. So lots to pay attention to that I think will set the stage for the rest of the Magnificent Seven, or at least the hyperscalers with the AI narrative.
Yeah, it certainly is going to set the tone, particularly as you say, with the CapEx narrative, whether that still is intact, but such a diverse business as well, as you pointed out. So thanks for breaking that all down. What do you see in the chart there, Rick?
Yeah, so when we look at Alphabet here, we can see that our green line, 181, is one that's come into prominence many times. It was old highs here and here. It was the low point after our gap up. It was supportive, and then we had the breakdown beyond that point. Then it became resistance. Old support became new resistance, and after the breakout to the upside, it once again was more of a floor. So these price levels can come back into focus many times. This is one of those sticky price levels here that you keep seeing a price start to close around over and over again. Now we're coming up to another noteworthy level here, 192.75 to be a little more precise in this case, and that's about where we are here, so 193, let's call it. That's about where we had the high point after our gap down on earnings, after our all-time highs there. So a noteworthy resistance level. Then you'd be looking to fill that gap, hopefully, if you were bullish in this name. But also, we're lining up pretty closely with the upper level of our channel here. Just a normal trend line across the lows, duplicated. Tried to match up as best as I could around the highs. That's about roughly where price topped out so far. So perhaps another point to watch, 190 to 193 or so. RSI, though, backing off a little bit out of that overbought area. Still short-term green trend line in play here. And also still really quite high overall as well in terms of our momentum indicator. Now we can see that the volume picks up here in this area around 193. So this could be a congestion zone for the bulls to look out for. And also the volume is heavy here around 175. That also coincides with our linear regression line and our orange 63-day exponential moving average here. So those are some downside levels that stick out beyond that 181 level that we discussed previously.
Okay, that's the technical trend for Alphabet ahead of that all-important earnings report card out tomorrow. Last but not least, let's, Jessica, talk about your final stock, and that is Nucor.
Yeah, Nucor actually showed up on that same weekly technical scan where I'm looking for a crossover of the 13 and 26 weekly moving averages. And then upon further investigation, I like to layer on the 200 weekly moving average, which we haven't talked about too often, or at least I haven't on this network. And the 200 weekly moving average, of course, is over a longer time frame and a longer trend. And there was a breakout above that. In my view, that's stronger technical momentum and a shift possibly to a longer term bullish trading cycle. But I want to discover where that momentum really came from. And it was this buyout talk that's happening with U.S. Steel, the $14 billion buyout, sparked some interest in U.S. based steel assets altogether. So Nucor being particularly asset rich, it could benefit from any high valuation sentiment. That's certainly across the entire industry. There's other macro tailwinds that come with tariffs and trade policy. And if that's making tightness and less inventory, they could benefit from higher prices if the demand is there. So from that buyout buzz, I think I'm a little caution with it overcoming that key level that I'm looking for, which is the 200 weekly moving average. So I want to see that to continue. So the way that I would position this is really looking for a neutrality type of trade, which is neutral in the short term, but then bullish in the long term, which would be via a cash secured put somewhere relatively close to the money, about 45 days out. Then I will help me, one, capture some volatility, but two, understand the rest of the macro picture, what happens with tariff and trade policy, is that is rather uncertain, and see how that actually translates over into Nucor.
Yeah, I wondered if that whole US Steel story had something to do with what you were seeing, given it had just shone such a spotlight on the broader industry and also the macro and the tariffs, as you mentioned. Jessica, thanks for that. Rick, take us through the technicals on this one.
So to follow up with that thought of a cash secured put, for example, and certainly not saying you should or shouldn't do any kind of trades or anything, but just looking for a notable downside level in the near term that's pretty close, 135 to 136 or so is our 252-day exponential moving average, our yellow 21-day exponential moving average. It lines up with our recent lows. It's also perhaps the upper boundary of this previous channel here between our two blue dashed lines here. So that's the first place that just stands out to me that I was going to discuss in the segment here. But there's other areas, if you were having that more neutral outlook, that stand out to the upside as well. We're pretty close to one of them now, actually slightly surpassing it here. So as I said, this resistance area would become support near 143. General lows, low point, breakdown point, highs once again, and about where we are today here. So that's one upside area, or rather around where we are right now in terms of price activity to keep a close eye on. Also 158 here. We can see high point, breakdown point, high point there as well. So that was another upside level that was sticking out to me. We can see RSI a bit short of that overbought area as well. The bulls would want a strong push above the resistance with a corresponding push in the RSI, preferably entering the overbought area as well there too. So if we were to look at our other studies here, volume profile, standard deviation channels, 143, that the area we're discussing, a heavier volume area to watch out for. Then it picks up once again around 150, 151 or so. To the downside, 135, not really the biggest volume area, but just below that, it's pretty heavy, starting around 132 to about 127 roughly. And to give a quick illustration to the 5-year chart, I meant to point this out on our first chart as well, but here's that 1326 weekly moving average crossover that Jessica was discussing there. We can also see a big breakout from a long-term downward channel, weekly RSI surging to the upside as well.
All right, Invesco, Alphabet and Nucor, all very different businesses, but very important stories. Thank you so much for highlighting those. Jessica Inskip and Rick Ducat, appreciate you for being here.